An initial public offering, IPO, is the process by which a private company offers shares of its stock to the public for the first time. This process allows the company to raise capital by selling ownership stakes to investors, while also providing a way for early investors and employees to cash out their holdings. The IPO process typically begins with a company hiring an investment bank to serve as the underwriter. The underwriter is responsible for conducting due diligence on the company, setting the offering price, and finding buyers for the shares. The underwriter will also work with the company to prepare a prospectus, which is a legal document that provides detailed information about the company's financials, management team, and business operations. The prospectus is filed with the Securities and Exchange Commission, SEC, and made available to potential investors. Once the prospectus is approved by the SEC, the underwriter will begin marketing the shares to potential investors through roadshows and other marketing efforts. The underwriter will also set the offering price, which is typically based on a combination of the company's financials, market conditions, and investor demand. On the day of the IPO, the underwriter and the company's management team will ring the opening bell at the stock exchange, marking the first day of public trading for the company's shares. One of the main benefits of an IPO is the ability for a company to raise significant capital. By selling shares to the public, the company can generate funds to invest in growth initiatives, pay down debt, or fund other strategic priorities. An IPO can also provide liquidity for early investors and employees who hold equity in the company. By selling their shares to the public, these stakeholders can realize a return on their investment and access cash to fund other projects or initiatives. An IPO can raise the profile of a company and help to establish its reputation in the market. By going public, a company can increase its visibility and attract new customers, partners, and investors. While an IPO can offer significant benefits, there are also several risks associated with the process. One of the main risks is the potential for market volatility and fluctuating stock prices. If investor demand is lower than expected, the stock price may fall below the offering price, resulting in lower proceeds for the company and potentially negative press coverage. Additionally, the process of going public can be expensive and time-consuming, with significant legal and regulatory requirements. The company may also face increased scrutiny from analysts, media outlets, and investors, which can lead to additional pressure and accountability. An IPO can also result in changes to the company's culture and operations. As the company becomes subject to increased regulatory and public scrutiny, it may need to adapt its processes and procedures to comply with new requirements. An IPO can be a significant milestone for a private company, providing a way to raise capital, provide liquidity for early investors, and establish a public presence. However, the process can also be complex, expensive, and time-consuming, with significant risks and uncertainties. By carefully evaluating the potential benefits and risks of an IPO, companies can make informed decisions about whether to pursue this path to growth and success.